When it comes to CRT cascade targets, there's usually more than one higher time frame target that is live in the market, and sometimes they're in conflict. So you might see one higher time frame that is saying bullish and other higher time frames that are saying bearish. So how do you know which target is the target that is active that you need to aim at to take the highest probability trade? Well, it always comes down to stacking your higher time frame targets. That gives you the best draw on price. Then use your execution time frame to make sure that it's a valid setup, and always use proper risk management so that if you're wrong, you're protecting your downside for the next setup. That's how to get into high probability trades like this 3+ R short on USDCAD. So I'm not going to run all the way back to the 12-month. Let's pick up at the 3-month and show you what targets were in place, what was in conflict, and why this was the right short. So let's go back to the 3-month time frame. We're going to use the 12-month as our execution time frame, but of course, in isolation, this means very little. Like any time frame in isolation, we need our higher time frames to paint the story of price, to set our cascade targets in the market so that we're always taking high probability trades. So let's bring in the 3-month candle and show you exactly what we saw at this particular point. Well, we see here that we had this inside bar. Price did not run the low of this previous 3-month candle. Instead, price opens and immediately trades above the previous 3-month candle. It then closes inside the previous range. So this becomes active accumulation and then manipulation. You see here, this was the high of the previous 3-month candle range right here. Price trades above, closes inside. So this sets an AMD target in the market, and it's right here. It's at the low of the 3-month accumulation candle, because that's how markets move. They accumulate, manipulate, close inside, and then distribute aggressively to the higher time frame draw on price. Accumulation, manipulation, distribution. So then let's drop down another time frame. So now we have the monthly time frame. We have an active 3-month target in the market, and at this point here, the monthly target, the month candle had printed bearish. So we saw accumulation, manipulation right here, close inside, distribution, but key point here being that this candle closed below its previous candle. So what are we expecting? We're expecting price to at least run lower. So this monthly candle's first cascade target that it sets is the monthly continuation. So as price is drawing back here, we're expecting price to shift and then run first the monthly continuation target, and then secondly the 3-month accumulation, manipulation, distribution target. So we have two targets that are aligning, but right here we have bullish 12-hour price action. So let's drop down another time frame. Now we go to the 2-week, and what we see here is an opposing AMD. Accumulation, price sweeps below, closes inside the previous 2-week range. We then see the countertrend AMD. Price runs into the high of the accumulation target on the 2-week time frame and closes above. This creates conflict. So while we have the monthly saying lower, the 3-month saying lower, at this particular point when this candle closes, the 2-week is saying continuations higher. We should see price trade into at least the high of the previous range. But that doesn't happen. So what happens instead? Let's drop down another time frame. So now we have the weekly time frame, and what we see is accumulation. Price accumulates higher to deliver the 2-week AMD. It then manipulates, and you see this right here. Price runs in to the previous weekly candle range. It then sweeps and closes inside. So this sets a weekly target of the low right here. Accumulation, manipulation, distribution. So we now have a proper read on cascade targets from the 3-month down. 3-month AMD target, monthly continuation target, weekly accumulation, manipulation, distribution target, and a conflicting 2-week continuation target. So what are we looking at on our execution time frame? Well, price has dumped and we have valid entries on the 12-hour time frame. This is the buy to sell. So this is the order block right here. We then also have a bearish fair value gap between candle 1 and candle 3. So this is an inefficiency in price right here. Internal range liquidity that price can draw towards before its next destination. So when we're looking at this, what can we expect? Is our execution time frame saying that we are going to continue higher? No, this is a short setup. What targets do we have that are active in the cascade stack? We have 1, 2, 3. 3 targets versus 1 2-week accumulation target. Continuation target. So this is clearly a short setup. So all you then need to do is take the trade from the fair value gap, either cover the swing point or the liquidation, which is what I had set at the start of the video. And what we're saying here is we can be wrong. Price might want to do another round of 2-week manipulation. That's fine. We're protecting our downside. But if we're right, we have 1.43 R to the weekly AMD target. We have 2.5 R to the monthly continuation. And we have 3.64 R with this particular entry to the 3-month AMD target. Let's bring back the monthly and show you exactly what happens. Price has created its top wick. This is the top wick of the monthly candle, and then aggressive distribution to exactly where? Target 1, target 2, target 3. This is CRT, cascade target stacking. The more targets you stack, the more you align execution timeframes, the more trades you're going to win. Now, if this sounds like a lot, it can be. But if you want to do this effectively for over 30 pairs in literally a blink of an eye, I have built a tool that's going to do it for you so that you're in full control over your trades and you understand exactly where the cascade stack exists for the pairs you're trading. So please subscribe, stay tuned because it's coming very soon. See you on the next one.